When you're a business owner facing divorce, how does that affect alimony and child support? Today, I'll show you how the rules actually work, how to present your numbers so that they're fair, and how to structure payments so your company and your family stay on solid ground. I'm Ana Augusto, a Florida family law attorney in Miami. I help business owners going through a divorce translate legal rules into cash flow plans they can sustain. In the next few minutes, you'll learn 3 essentials. 1, Florida's 2023 alimony reform, what changed and what it means for you. 2, what courts count as income when you run a business because it isn't the same as the IRS. And 3, why hiding income backfires and what transparency looks like. By the end, you'll have a realistic picture of what to expect and what to offer. Let's get you some clarity and some peace of mind. Just know this is Florida-specific and general information, not legal advice for your situation. For advice specific to you, speak with a family law attorney like me. You might be worried about never-ending alimony payments. Maybe you're tempted to reduce your salary on paper. Or you heard rumors that child support will be based on some fantasy number you can't control. So let's replace rumors with rules. First, you'll hear me say alimony and spousal support. Just know those mean the same thing. And in 2023, there was a big overhaul to alimony in Florida. The biggest change, there's no more permanent lifetime alimony in Florida. It's tied to marriage length. And when it comes to spousal and child support, the courts look at your true income, not revenue. But if you start playing games with your numbers, the judge can impute your income, which means they can estimate what it should be. So you need to keep everything upfront and above board. So let's get into defining how the court will define your income. What counts as income? Your true earnings as an owner. Spousal and child support isn't based just on your paycheck or salary from your business. Courts consider all the benefits your business provides to you personally. So yes, your salary or owner draws. Whatever you pay yourself goes on the board. But then any K-1s or pass-through profits, if you're an S-Corp, LLC, or partnership, your share of profit shows up, even if you keep some in the company. That's your retained or phantom income, and it can get tricky. Say your business shows $200,000 in profit. You take $80,000 salary, the other $120,000 stays in the company. But is that $120,000 available to you, or is it legitimately needed for operations? If you can show it's required for equipment purchase, debt service, working capital, expansion needs, you might keep it out of the income calculation. But if it's just sitting there or you're taking similar amounts as distributions before, it might count. You need to document it. Show your lender requirement, your inventory cycles, your accounts receivable aging. If it looks like the money is readily available to you, expect it to count towards your income. Next is the income where business owners get surprised. All those business perks the IRS let you write off as expenses, the court will often count those as income. The company pays your car, that's income. Business covers your cell phone, income. Health insurance through the company, yep, that too. Country club membership for business development, if you use it personally, it counts. Basically, if you would have to pay for it anyway, it doesn't matter if it's coming out of your business or personal account. It's of personal benefit to you, so it's part of your income. The court will also look at irregular and one-off distributions, like bonuses or unusual reimbursements. Courts often average these over a few years, so one good year or one bad year doesn't skew the numbers. Here's what you can do this week to get a clearer picture of what the court will see. Create a true income worksheet, 1 page with 4 lines. Line 1, salary or draws, average over 6 to 12 months. Line 2, K-1s and distributions, note when they come. Line 3, monthly value of every perk the business pays. Line 4, irregulars from the last year or two. Then attach 12 to 24 months of bank statements. Show the pattern, no hiding, no games. Ask your CPA for an owner benefit summary. You can get what are called normalization notes that explain what's recurring versus one time. Walking into mediation with this kind of transparency deflates suspicion. You control the story, you can avoid inflated support based on guesses. Alimony Overhaul, the 2023 rules in plain English. Now, let's talk specifically about spousal support, or as it's commonly known, alimony. Permanent alimony is gone in Florida. No more paying your spouse until they remarry or one of you dies. Now, there are 4 types of alimony the court can award. The first is temporary support during the case. This keeps essentials covered while you sort everything out and the divorce is finalized. Then there's the bridge the gap alimony. This is short-term help for the transition to single life with a maximum of 2 years. Next is rehabilitative alimony. This is support tied to a specific plan to help your spouse become self-sufficient, like getting a degree, certification, or job training. This is usually capped at 5 years. And then there is durational alimony. This is the longer-term option, but it has caps that depend on how long you were married. Here's how those work. Short-term marriages under 10 years can get support for up to 50% of the marriage. So a 10-year marriage would be capped at 5 years. A moderate marriage between 10 and 20 years can get 60% of the marriage. So a 15-year marriage would be capped at 9 years. And long-term marriages over 20 years can get up to 75% of the marriage. So a 20-year marriage would be capped at 15 years. There's also a cap on the amount. It's 35% of the difference in your net income. Now, I don't want to get into all the factors that could come into play that could change these numbers and make them less. I want you to get 2 huge takeaways. There's a finish line to alimony and you can plan for it. So what should you do? First, calculate your marriage length from I do to the filing date. Then we can work on realistic scenarios. Think about your spouse's path to being able to support themselves. Do they need retraining? That's rehabilitative. Are they close to being self-sufficient and just need help getting back on their feet? Maybe bridge the gap works. And if you had a long marriage with a big income gap, durational alimony might apply. But while child support is set in the statutes, alimony is negotiable. For example, you can trade amounts for duration, higher payments for shorter time, lower payments for longer. What works for your cash flow? You can also negotiate clear termination triggers. Remarriage, cohabitation, retirement, spell them out. Knowing there's an end changes everything. Support becomes an expense with a sunset that you can budget for and plan around. Transparency over tricks. Why hiding will hunt you. Now, because your income is the main driver here, let me be direct. Some owners try to get clever and slash their salary to nothing. They'll delay invoicing to look broke or run personal expenses through the business to inflate deductions. But here's what happens. Judges have seen every trick. Forensic accountants know the games. And your spouse's attorney will start digging even deeper. And if the numbers look fake, courts can impute income. That means that the judges can estimate what you should be making and base your support numbers off of that. So if you've been paying yourself $120,000 for 5 years and suddenly it drops to $40,000 when divorce starts with no legitimate business reason, the court might calculate support based on $120,000 anyway. If your lifestyle doesn't match your claimed income or your bank statements show different patterns than what you're claiming, those are huge red flags. The result? Not only higher imputed support, the court could make you pay the extra attorney and accounting fees to get to the truth. And your credibility for the entire case can be destroyed. There have been cases where judges threw out all of the business owner's deductions because there was too much funny business going on. The better way is transparency. Maintain business as usual compensation. If there's a real change, like a lost client or market downturn, document it thoroughly. Keep a Friday cash memo going every week. Take 10 minutes to document what comes in, what went out, any one-offs. This builds a solid record of reality. And provide complete financial disclosures on time. If income fluctuates, show multiple years. If a month was terrible for real reasons, explain it up front. Just remember the economics. Fair support reduces conflict. Less conflict means lower legal fees. Lower fees keep money in the business and family. Doing it right isn't just ethical, it's profitable. Now, if you want to get ahead of this, grab my free Florida Business Owner Divorce Readiness Kit from the link in the description. Inside, you'll find a 2-household budget template for reality-based planning, the Friday cash memo format for weekly cash tracking, templates for texting with your spouse, and more. Download it now and start preparing your plan this afternoon. If you started this episode fearing endless support payments you couldn't control, now you know there's no more lifetime alimony. You know how the courts will look at your income, and you know why cooking the books is a recipe for disaster. Being transparent is not just compliance, that's leadership. You're showing everyone, your team, your kids, even the judge, that you're steady, honest, organized, focused on stability for everyone who depends on you. That approach pays off legally, financially, and emotionally. In my next video, we'll talk about protecting your operations and privacy. We'll cover divorce-proofing the workday with quiet discovery, read-only document sharing, and protective orders for sensitive data. Simple communication that keeps staff and clients calm. Until then, I'm Ana Augusto. Download your Readiness Kit below, and I'll see you in episode 6.